Hey guys, Steven here. Welcome to another episode of Irresponsibly Long. As you can tell, I am by myself today, and that is because my esteemed co-host, Eric Johansson, has just welcomed a baby daughter into the world. So congratulations, Eric. We're not going to be able to do the normal pod this week, but I thought we could do something special for you guys. For this week's episode of Irresponsibly Long, I'm just going to include this week's Magic Lines video, which is a pretty detailed breakdown of the quarterly, monthly sort of long-term setups and some short-term setups in the market, where I see stocks going, crypto, bonds, even some special trades. So hope you guys enjoy that. It gives you a little sneak peek at what we do inside of the Magic Lines Discord. I release one of these videos every single week, and then throughout the week I give trade updates, updates on price action as everything unfolds from the weekly video. So if you like it, magiclines.xyz/IL, running a little spring special right now. Use code LONG50 and you can get $50 off your Magic Lines subscription for life. So if you've been meaning to join, use the code. You can claim a free trial on top of the code. Pop in there for 7 days. See if you like it. There's some crazy markets right now. It's been an investor's nightmare, but a trader's paradise. So if you think it might be interesting to you, magiclines.xyz/IL, code LONG50, and I will see you in the Discord. Hope you guys enjoy this episode. What's up, everybody? Good morning. Welcome to this week's new Magic Lines video. It is April 1st, April Fool's Day. Is the market pulling a fast one on us? It's pumping. It's pumping. But is it a fake out? Or are we going to pump harder? Going to answer that question for you. Maybe a couple more questions in today's video. Let's start off by pulling up the charts. Let's take a look at some of the monthly, quarterly closes. Big day with some significant time frame closes. We're a new week, new month, new quarter territory. I was telling you guys last week to get out of stuff if you're in kind of short-term leverage positions. I got out of most everything leverage related because you always get this kind of fuckery in the end of the month, start of a new big time period. So that, coupled with the fact that we have Liberation Day tomorrow, which is going to maybe cause some of this video to to age poorly. I love making videos before these giant economic events. But all these major opens plus Liberation Day. And it's just kind of a bad time to be doing anything other than like really lower time frame scalping. And if most of you guys aren't lower time frame scalpers, then you should be sitting it out, waiting for your higher time frame levels if you're sort of like a longer term investor. So we're going to try to do a lot of focus on the higher time frame in this video because I want to lay out what I think is going to be an investing plan for me over the next 3 to 6 months as I see it. So first off, let's pull up the ES chart here. All right, so this is a chart of ES, S&P 500 futures, starting very zoomed out here. 12-month chart. You can see we got a little sweep of the high, potential target, the mid-range, which is right around 54.37 or so. So that's definitely a level I have on my radar. I'm going to mark that here on the chart. Okay, so there is our yearly mid-range. Let's come down to the quarterly candles because we just had a quarterly close. Last quarter's close, definitely you see a shift in candle structure here, close below prior bullish candle. So this could be the formation of an order block and we end up closing above and going higher, and then this gets validated as like major demand, or this is the start of some sort of a larger pullback potentially. You can kind of see last time we had a shift. It's kind of already too late to do anything. We were pretty nuked by then. You don't see too many quarterly down candles on stocks. Stocks only go up, right? It's the beauty of them. Anyway, a little bit bearish on the quarterly. Monthly candle also pretty bearish. Had a nice expansion to the downside in March, closed below some significant candle lows. Right, so monthly bias is bearish. Your first target this month is going to be previous month's low, 55.09. So I do think we hit that probably this month, possibly next month. So kind of a medium term, that's definitely a target for me. And that aligns with our yearly mid-range here at 54.20. So everything's kind of pulling us down at the moment. On the weekly chart, some interesting things to note here, right? So there is a bullish scenario from a sort of a TA perspective here. So this zone is a pretty strong area of demand. We pushed price up pretty significantly, consolidated above. Oftentimes you come back, you tag this, and you can see here we have the zone within the zone that broke structure, right? So this is a kind of a bullish subzone. You can see price reacting off the mid-range here, and then another tap here. So there is a scenario, I think, where price just sort of starts reclaiming, these bearish fair value gaps. This one here in particular, I think is of note. So if we start reclaiming above this, it's possible this just plays out as a pretty nice manipulation leg into demand. And then, I think probably have to look into flipping bullish, but not really my base case right now. My base case is that we do reject off of this imbalance in here and ultimately target these lows. I think that an interesting area for me is probably the mid-range of this kind of origin move here. So this little zone is what kicked off the entire run from the end of last year to the February high, right? So this is a pretty significant move. 200 days, and it pumped us a solid 20%, right? So this whole area hasn't really been tested yet. And then we have some liquidity resting here above the mid-range. So gun to my head, kind of looking at around 53.50 or so, probably by June. I have some open-mindedness as to the path we take to get there, but this is sort of my bias. And I would prefer to be looking for shorts, I think. And that could change with the Liberation Day shenanigans, for sure. But for now, short biased to the downside. I think if I come here on the daily, this is a weekly fair value gap. So you can see we've retested it and gotten a pretty nasty move down. So it wouldn't surprise me at all if this major pump today was simply like a fake out move off the quarterly open. We're just retesting this imbalance, and then we sort of immediately roll over. So if we're hanging around up here in the coming days and you have a little bit too much risk on, I don't hate de-risking there, because I am expecting a little more downside. And like I said, we reclaimed this I think maybe we have to start thinking about new all-time highs and change the bias. But for now, I don't see any reason to on stocks. I think if you zoom out a little bit more too, maybe go to like a 6-month candle, we can kind of sanity check ourselves. Prior 6-month candle here is quite bullish, right? So I wouldn't really expect to lose this candle's low. It's possible, but I'm thinking that we hold this. I get the general vibe that we're going to maybe go down low enough to get people to start panicking. But I see like every reason for the admin to kind of just pull an Uno card and just completely reverse everything if stuff gets too nasty. Main reason being that they simply can't afford a recession. A recession would just be devastating to the debt because so much of the debt comes from the stock market and tax receipts, and all of these things would be in the toilet. So I do think they're playing a game of high stakes chicken. And as soon as they get some of our trade partners to blink, or as soon as they get a little bit of a move down in longer term rates, and they can roll over some of that debt, I think you got to be looking to get greedy. Probably late summer is my best guess, and that makes a lot of sense also from a seasonality perspective. So that's what I'm thinking right now as far as stocks go. Let's take a look at the Bitcoin. Actually, let's go even more zoomed out first, right? Let's take a look at total crypto market cap. So when I look at total crypto cap here on the old 6-month chart, it looks pretty good. Looks pretty good because you have this candle closes outside the range. So this 6-month range here, I'm feeling pretty good about buying towards the bottom of this range, right? I'm not thinking that we're going to take this low out. And then as we zoom in to the monthly, you can see there's some areas of interest, notably this monthly order block here. And as I kind of pull back for the weekly, you can clearly see what I think is a really interesting zone, because this is the demand that basically sort of manipulated up, manipulated down, and then created what I feel like is going to be the bottom of our sort of generational crypto range here. And you can see that move tapped into this prior demand before sending us higher. So I don't think there's any reason for price to go lower than this box. Like if it does, it's coming all the way back down, I think, and something horrific has probably happened. So I prefer to err on the side of not massive bear porn, right? Because I think there's good reason to believe that we can basically, mark that off as a worst case scenario. So then I'm thinking, okay, what does my dealing range look like? Specifically, where is my OTE, my 0.618, which I think is like a very interesting level. And you can see we've already tapped that. We've already kind of tagged this zone, which is interesting. So I would be watching for some significant reactions from here, some indication that maybe that was it. Like say we reclaim the prior range high after tapping the zone and we had some really impulsive move up. I might start considering that like that was the bottom and repositioning. As of now, though, this just looks like we've had a pretty major range breakdown, and you typically don't just V reverse. So it's not going to surprise me if we tap, come up a little bit, and then ultimately roll over and explore lower in this zone. And I think you can see you have this kind of demand within the demand. So this is my kind of Jesus order block here. This is like the mega demand. And then you can see the zone from this order block that broke structure. And you can see that we haven't quite tagged that yet. So I think buys in here, you know, you're talking sub 2.4 trillion are going to probably age pretty well. But again, we're just using this as sort of like a barometer for the overall crypto market. A lot of this is being held up by Bitcoin. And then you can see, you know, you can really see the diff when we come here into the other extreme, which is basically others. This is everything outside of the top 10. And honestly, like others looks pretty interesting because we're already at basically this sort of like pre-election zone that I talked about. And you know, as I look at this, it makes me think I should be probably aggressively bidding more alts here, because I do think there's a good chance this area holds as sort of like a bottom. I think this is one of the more interesting charts, and it doesn't align very nicely with stocks and very nicely with Bitcoin, because these sort of further out the risk curve assets have like capitulated so hard that it almost looks like they have the same downside, if not like less downside than Bitcoin from here on out, which is kind of crazy. Let me pop into some of the higher time frame charts, see if this, okay. So yeah, I mean, I guess when I go out to some very high time frame charts, it looks a little sketchy. So yeah, it wouldn't shock me to have like a huge drawdown here. Yeah, so the quarterly chart, I've already tagged this imbalance. Yeah. I don't know. I think as far as like long term goes, like if most of you guys are investing for 1-2 years, you can just accumulate stuff and then wait for it to go up a lot. You're kind of in value town already. And one of the main reasons this is like mega value town is because this was the pre-election low here, right? So this is all demand from before Trump even existed. And although I think things can always get worse, for sure, like they could do some wild shit and then we could end up going back down to this zone, right? Just full retracing, right? Which is completely plausible. It's completely plausible. You can get a little like move up here and then just absolutely just destroy people and then kind of come back, something like that. Totally plausible. But, you know, over a long enough time horizon, like buying in the demand zone before we got this president, who I think is still ultimately going to end up being mega bullish for all risk assets and crypto. And now you can buy in these sort of pre-election levels. Like, I think you have to nibble here. Like, I think you can't have zero alt exposure here for your long-term bags, because this could be the bottom, as bad as it might feel right now. It could be. And I'm not saying to go all in here, but like this is value, because this is the market like pricing in, oh my God, everything's going to be so bullish, right? Here it's like, is Kamala going to exist? Are we going to just die, right? So market prices it in, and now we've had sort of the realization that this stuff isn't happening yet. And everything we priced in is like, whoops. But I think this still happens up here. I think it still happens. I don't know if it's a year from now or 2 years from now, but if your horizon is long, I think everything the market priced in, we go there, right? So little bit of conflict with my general timeline, which is sort of that I want to probably be doing most of my buying at the end of summer, open to, been scalping some longs for the short term. So there's a little bit of a conflict there in that, this does look very good for a bottom here on others. But as I showed you with total, and as I'm going to show you now with Bitcoin, it's hard for me to believe that the worst is completely over, right? So Bitcoin, if we zoom out to the quarterly chart, I would say the quarterly setup looks really good. Prior quarter, you had this expansion candle, very clear close above all-time highs. That's all great. And then you leave behind this fair value gap here on this move. We sweep the high. So as far as like a 3-month bias goes, I think there's a very, 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 very high chance that Bitcoin trades back in the 76s towards this low. That could happen later in the quarter, but I think ultimately this is where we want to go. The March candle did close as a sweep of the February low, but February candle was a pretty nasty expansion candle. This candle wants lower. We slept, we closed back inside, but couldn't close it green. So I think all in all, like this wants to ultimately come down on the monthly as well. But we are back inside the February range and we've accepted a little bit. And so I think as a result of that, we have to start thinking about whether we could go to the February mid-range first. I'm just going to highlight this. Just highlight this as our February range. So this is the February mid-range. And you can see that here on the weekly, we've swept, we've closed above the sweep candle. This all looks pretty medium-term bullish, right? So I'm expecting, a tag of like 90K, 90.5K or so. That's sort of where I think we're going in the intermediate term. And that also makes sense because we have this range low here from our breakdown zone. This hasn't been tagged yet either. So I see a couple of points of interest pulling price up at the moment. So the question kind of becomes, okay, what is the path that we take to get here? Because this looks pretty okay, for a bounce trade with all the things we've shown. Things get a little weirder though when we zoom in on the 4-hour, and on the 4-hour, I think you can see we have a pretty clear break of structure here, right? So in as far as like the internal range goes, right? Like if you think about this shaded zone, given that there's been a structure break, like I'm sort of biased towards this wanting to roll over, go back down towards the range lows, maybe retest February low. But because these areas haven't been hit yet, I think that if you get a move like this to start the month, although you don't want to blindly long here, like if you start getting some sort of bullish setup, I think it's an indication that price probably wants to come back up and mitigate those areas we identified before possibly continuing lower. And the major zone to watch for me is this level here, because this was like the origin demand of the move that swept all-time high. You can see we bounced off it initially and then ultimately blasted through it, flipped it to resistance, slipped it to resistance, tagged the mid-range, then we go to new lows, right? So I think price probably wants to come up here one more time. And then you're going to have some confluence between, the mid-range of this sort of range low, the mid-range of the monthly here. Maybe we run some sort of like internal liquidity here. These got some like equal highs. here. Maybe price comes up, tags these and dumps, right? So as far as like a plan goes, if I zoom in a little bit more, you can kind of identify last Monday's range low, which is the bottom of this zone here. Now, this is an interesting point of interaction because you can see that was the demand that broke structure to the upside. Retest, retest, hold. Ultimately, we lose it and then come down, right? So this is my line in the sand for bullishness right now. I think that if we come up this week, we close, we start holding above this prior Monday low, I think you can expect price to probably run these highs, come up here into the 91K region. But at that point, I'm pretty nervous because if I start getting some shift up here and price comes back down, I no longer think that this range low is going to hold because I think we've already done our business up here, and I think there's a higher time frame bias pulling us lower on the quarterly, right? So this is one scenario, reject, come up, but then I think the other scenario is that we just reclaim this straight away. We do some sort of back inside and under, and then some sort of underside retest of this zone is probably a trade to new lows. Although I think if you want to be like mega careful, you could always just take your trade off at 78.2 or something in case we put in like a little triple bottom. But if I zoom back out, from this kind of lower time frame plan, I think the kind of like forehead explanation for where we bottom is that I just think if price gets back to the 2021 all-time high, I just think people are going to buy this level. 69K. It's got good meme value. 69,000. Pretty impressive, right? So we got the meme value. We've got the 2021 all-time high. We've got the 2024 new all-time high, right? This range high. This is your pre-election low. This is your dealing range. Like I don't think that we lose this low unless the Trump admin just completely loses control of the economy. And I don't think they're going to completely lose control of the economy because I think completely losing control of the economy is a choice at this point. And I don't see the benefit of them doing that, right? Like I said, I think this is a game of chicken. I think a game of chicken brings us down towards the bottom of this dealing range. But I think this is ultimately like a fantastic area to buy, right? Because you've got all this confluence. You've got the prior all-time high, you've got the prior all-time high, you've got the golden pocket 0.618, 0.79, just kind of like a generally good area to be averaging in to a position. And if I zoom into the daily, like you can see a couple of critical areas. I mean, this is a major origin zone here. And I see no reason to believe why we would lose this zone at the moment. I just don't see it right now. Obviously that could change with the economic climate. But right now we're just shooting ourselves in the foot. And like we could just always stop shooting ourselves in the foot and then our foot will stop bleeding. And then we can kind of go back up. Sorry, that's a terrible analogy. But this general area for buying, I think, is great. And I think if you sort of are under the mentality that like we may come down here and chill in this area for a while and you buy, I think that it's going to age super, super well. I think everybody believes Bitcoin's going over like 120K, 150K. I think people are going to be buying, 69K, 64K, whatever. They're going to be like, okay, this is kind of a free 2x I think that risk reward is going to be good enough for most people. And yeah, we do have this area of interest here, which is kind of the earliest place I think we probably might bottom. This is your demand responsible for the break of the previous range high. So this is going to be a pretty heavily bid area, I think. I don't know whether that holds or if we kind of like run some of this internal liquidity. I would guess we run some of this internal liquidity, but it's very hard to predict what's going to happen in advance. You just kind of mark out your areas of interest and you observe what price does when it gets there, and then you can sometimes alter your plan. But I think if you're a longer term guy, your plan is just to be buying in here. Yeah. Also, by the way, I don't know if you guys have seen like Bitcoin's seasonality, but Bitcoin is typically bearish March, bullish April, May, and then very bearish June, July, August in aggregate. I think the summer in aggregate, like the quarter 3, is like negative 3% or so. And then Q4 is just massive numbers, right? So the play has always been to sell an exit pump in May and then like rebuy late summer. It's just like it keeps happening over and over and over again. So I think we should assume that that's going to happen until proven otherwise. And that would mean if this plays out exactly in a predictable way, which it probably won't because markets aren't that easy, then it would give you the fake out, liquidate a bunch of people. Oh God, we're going lower. It's over. Actually, no, fake out way up here, get everybody all bulled up and then like dump it. Will it happen exactly like that? Probably not. But those two scenarios I drew out, I think are the things that you want to be planning for. And yeah, if we start reclaiming and it looks like we actually want to go back up and this was all just a bunch of fuckery, then I think we cross that bridge when we come to it. But for now, basically the chart is fucked. The chart is broken. Structure is broken. And if I throw on my little volume nodes here, like you can clearly see like we've lost equilibrium, right? This was like balanced price over here. This is your highest volume node, 96K. We've obviously lost that. And then there's nothing here, right? There's nothing here. So it's just most obvious that price wants to go here. And again, we already identified that 69K level that corresponds with a couple of high volume nodes here. There's just like very little reason for us to just bottom here and a lot of reason for us to bottom lower. If it happens that this plays out as some crazy manipulation and we go back, okay, fine. But like we shouldn't be just assuming that's going to happen. We should just look at the chart, see that the chart is broken, understand that the broken chart's going to take some time to repair because it was a pretty significant thing that we broke. And then just look at the obvious levels where this kind of wants to go back up. If I do a little bit of a moving average analysis here, you can see a couple more things. Let me clean up this a little bit. There we go. Big thing right now is the 200-day. So you can see we are currently rejecting off of it. So I think this is more confluence for maybe like a shorter term short setup here. We've also left behind these equal lows, right? So going higher straight away from here doesn't make a lot of sense to me. It does make sense that we could deviate the 200 trap some people, liquidate the late longers, take this liquidity, and then go up. But otherwise, no, you can see clear bearish trend on the these are the shorter time frame MA bands, and then this is your 200 right here. So there's just nothing bullish here in terms of like daily momentum. Also, nothing bullish as of weekly momentum. I mean, we've closed multiple weeks below the bands. We're sort of just rejecting at the underside here. It just makes sense for this to roll over, because like, what is more likely, that we just reclaim all of this and go back to equilibrium up here, or that like we've broken down and we find, some new buyers down here where there were buyers before? I don't know, just kind of simple stuff there. Let's move on to Ethereum, because I know a lot of you guys still hold this coin for some reason. With Ethereum, we're gonna take a step way back here. We're gonna zoom out. We're gonna zoom way out. I'm gonna clear the chart. I'm gonna tell a little story. Ethereum 12-month chart. $2021 bull run candle, nice expansion candle, flat bottom, sketch. Then we get this mega bearish expansion candle. And then the recent move up sweeps this bearish expansion candle. And now we've broken the low of the yearly candle that swept this, right? So in my mind, like a very obvious target is the low of this expansion candle, right? So that would be 879. But then I also look down here and I see this flat candle, and I'm like, well, why wouldn't we take this too? Especially since we've sort of failed to close above. It makes sense that we might take the low of this expansion candle. That takes us to about 737. If we view the sort of 2018 bear market, right, we just view this as sort of like a giant bullish order block, giant bullish accumulation zone. It is worth noting that the mid-range of this zone has never been tagged, and it rests like very nicely in line with the low of the 2021 candle at this 730 or so level, right? So I think this is extreme value for Ethereum. And yes, that would be pretty brutal. That's another 60% down from here. And that is a 80 some odd percent drawdown from this sort of all-time high. Well, excuse me, the high of this mini cycle. But it just makes a lot of sense to me that would happen from the candle science. I think I've talked to you guys about the double top here. Double top usually runs the low. We've got the magnet of this zone, but like all the stars are aligning for like a pretty big move down. Most recent quarterly candle, mega bearish, closed below the previous bullish candle. These lows at a minimum probably are the next target. So this is 1530. That being said, there's some stuff to note on the lower time frame chart. And the first area of trouble, I think, for bears is going to be this origin zone here, this order block on the weekly that has just barely been tapped already, but I think probably gets tagged a little bit lower. So I think this could potentially produce like a pretty violent reaction. Would not shock me if we come in here and like do some really, really pumpy move up and then die. Because it's a pretty key level. It's a pretty key level. Now, I think the main thing holding Ethereum back right now is this like a little weekly order block here. This is an interesting area because if I zoom in a little bit, you can probably see it a little more clearly. Probably refine this zone. This is an interesting area because it is the demand that broke this high, and this zone broke this high, right? So it's the sort of zone responsible within the zone responsible for this like big move, right? So it's a critical sort of like pivot area for us. And you can see we've kind of closed through it. We came up, underside retest, also underside retest to this quarterly level at 21, and then dumped down pretty forcefully, right? So everything to me indicates that we want to go lower. Like we've basically accepted within this range here. So this is the range I'm sort of currently working with on ETH on my lower time frames. See a nice little bounce off the mid-range, double bottom off the mid-range there. So but you can see price into the zone. We sort of like deviate the high of this range, reject off of this sort of demand that we sort of flipped into resistance. And now we've put in a couple of bearish fair value gaps, and you can come on the 2-day chart and you can see that this is just one bearish fair value gap. And then we have this kind of magnet below us. I think that this 1750 low is a pretty obvious target. I don't know how deep we go into this zone. If we don't immediately bottom on sweeping the weekly level, I think we could go down into kind of 640s or so. But that is my near-term bias on ETH. And if I kind of run a similar lower time frame analysis that we ran on Bitcoin, you can see like obviously we've clearly got a sort of lower time frame, more internal structural break. This is a pretty bearish shift right now. So I think until proven otherwise, kind of assuming that price is going to come up in here and then roll over. And then does it give you like a crazy long opportunity? Is there some little blow off in April or May? Possibly. But for now, I'm sort of focused on like the long term, the multi-months, the maybe even multi-year, depending on how this plays out. The multi-month is quite bearish in my opinion. And then, the sort of multi-day, multi-week, however long this plays out is also bearish in my opinion. And then somewhere in the middle, we have the room for price to do something like come back off this zone and reclaim, right? At which point we're back inside this range, and like we could do some serious damage to the upside, especially because everybody and their mother is currently short this coin, and it's been left for dead, and for good reason. For good reason. I don't think there's any reason to sort of jump in front of that train right now. I'm just saying, like I do see like the sort of in between potential for us to go up before the longer term bear. But yeah, medium short term target on ETH 1740, longer term target on ETH probably 800, open to longs in the middle. ETH BTC, we could talk about this like a little bit. Just one of the worst charts in all of charts in existence right now. I mean, we've lost this sort of last gasp range. I think that the next chance for a bottom is probably down here. All the way back to the 2017 kind of era. Chance for a bottom there. Permanent bottom, I don't know, but maybe a bottom with like a pretty significant bounce. But this is just like unbelievable. Incidentally, ETH BTC is probably an incredible trade if you get like a little bit of a relief rally. Like if we get a relief rally up into these like MA bands here, like I'm probably just going to start TWAPing like an ETH BTC short over the course of weeks, maybe. Because I just, this thing just looks like it's going to die. I just don't want to enter it here as it's like kind of far from the MA bands, because you could have one of these sort of like face rippers, right? You go mega short and then it rips 26% in your face, and then you're just toast. So like a move up into here or something would be maybe incredible for a short, because that would be a 50% move down from that point. So pretty nice trade if you can get it. But yeah, I mean, we just ran some liquidity here. I think stepping in front of this right now is probably not worth the risk reward. But yeah, just a horrendous chart. And if we see how like far it is to my bottom here, I mean, we're talking about probably about 32% from where we are right now. Yeah, about 32%. So that checks out. So if you had a move from Bitcoin, you know, from 84K to say, let me do some maths here real quick. So if Bitcoin goes to 68K, I'd be 20% down. 20% down. So that would probably equate with ETH losing 50% in dollar value, if we assume that the ETH BTC chart does this. So 50% for ETH would take us to these lows. So it's completely reasonable to me that we could just take all of this out. The other thing I forgot to draw on this chart for you guys is you've also got this meme trend line, which has clearly been breached. So maybe a little March or May ripper coincides with like an underside retest to this trend line, and then we just kind of back inside this zone here, and then you short it to hell. Something to keep in mind. One of the interesting potential short plays I have lined up for Q3 is XRP. Right now, you know, it's technically fine holding the weekly MAs. Pretty obvious that you've got a bit of a head and shoulders going on here, though. And I see some pretty bearish momentum now towards the downside of the range. So I would not be surprised if this just rolls over from here, honestly. And I think like much in the case with like Hype was a good example of this, right? Like Hype was a very strong coin. Until it wasn't. Like back here, the market was getting wrecked, and all everybody talked about, oh God, I still have PTSD of when I shorted this thing. I got stopped out by the one tick right here. My worst trade of the year, probably. But there was a time where this was considered strong. Like, oh, look how strong Hype is. But it was just sort of delayed in breaking down and dying, right? Because when this thing went, it went hard and it went fast. And once we sort of broke that trend line, it just rapidly nuked another 50% from there. So kind of expecting a similar thing to play out this quarter on XRP. You know, we have a couple options here. We can wait for the loss of the range, acceptance below, and then kind of get in on an underside retest. I think this thing could dive quite a bit if it goes I mean, there's not a lot of volume until like $1, and even then, it's a little bit sketchy. So this is our very high time frame range. So yeah, like a $1.10 makes pretty good sense as a target. So would be a pretty nice trade. I'm trying to think what that looks like if you short it from here. I got this thing backwards. Yeah, so it's kind of in an awkward spot right now. Can't necessarily just short here because this is still range bound, and I think you could just get some sort of ripper up. I would keep an eye out for some sort of liquidity grab, and higher up in the range. Might be interested in positioning. Otherwise, positioning into the breakdown is probably going to be a good move, and I'll keep you guys updated on that in the Discord as that happens, because that might be one of those moves where you just kind of see it coming, and you just shove all the chips in, and you just know it's just going to nuke. It's going to be a beauty, I think. So keeping that on the radar. The last thing, actually, no, I got one more thing. Let's talk about one more thing before the last thing here. Let's talk about Solana. I've been talking about Sol for a while. I just want to reiterate the plan. I think Sol probably wants to go somewhere here. I've outlined this zone to you guys before, but this area looks interesting to me. Just run out this consolidation, these lows here, dump into this. We haven't tagged the mid-range yet, about $100. I think we probably dip below 100. But then you'll notice we have the 200 week down here. So a pretty good price, I think, if you start getting this thing 3 digits. I'm definitely going to be buying down here, and I do think that price will come. The quarterly close, not great. Sweep previous quarter's high, close below previous quarter's high. This is just like a very obvious target here. Equal lows, quarterly low, sitting above this range here. So like everything about this just wants to go sub 100. The question for me is like, how do you get in a short here? I don't see like a fantastic setup for that yet. I don't. And that's pretty normal. It's the beginning of the quarter. It's the beginning of the month. Got to let price develop a little bit. I'm still pretty open to the idea that Solana comes up here, to be honest. Tags these equal highs. The exact path of how we get there, not entirely sure. And right now, nothing about the lower time frame price action looks like it wants to do that, right? But in the same way that Bitcoin looks like it might want to sort of put in some double bottom here and then kind of go up, I could see a similar thing playing out with Solana. But right now, there's nothing to long here. Like this is not looking great for a long at the moment. So would keep an eye out for some sort of a bullish setup here towards the bottom of the range, because I think you could get a pretty good move, but not interested in shorts here. Even though I think price is definitely going down here, I just don't I just don't see the risk reward for shorts right now because you could just get blown out so hard in the other direction. And you're just not in the premium of any range. So it's a bit dangerous to position here. So better to just think about longs down here, in my opinion. One last trade I got for you guys. Want to pop back in and check on our old friend TLT. TLT has been something we've positioned in for a while. I came way zoomed out on this chart. A few guys pointed out this liquidity grab here near the Pico bottom lows, back inside the range. The weekly, just looks pretty interesting. So we close back inside the range here, put in a higher high, suggesting to me that we want to go higher, come back one more time to test this origin, get a nice reaction off of it. And now it just looks like we've got a pretty clear kind of like inverted head and shoulders thing going on. And I think a pretty easy target for me on this right now is 104 roughly. So this is a pretty nice move, right? This is a 15% move. So most of my cash has been sitting in TLT because I'm a little greedy and I don't just want to collect the 4.5% yield or whatever TLT is yielding right now. I also want to collect the appreciation because I think that, the price of the bonds is going up as well. So for me, this is like a double dip while I sort of wait out the storm. We've been sort of chilling for a little bit, kind of trying to reclaim the 200-day. You can see that, and it looks like we're going to close above it today after a move down to tag this unmitigated zone. So the way I see it, all of these bullish zones to the downside have been mitigated. This major zone has been mitigated. I think this thing is ready to move. And I think the play, if this thing is ready to move and you want to simplify your trading and you're kind of a degen, is a TMF. So TMF is a 3x 20-year plus bull, right? So you're longing 20-year bonds basically with 3x leverage. You can see that this is not a thing that you want to hold for long periods of time because it just goes down only. This is what all these levered products do, is they just bleed. They just bleed because of the way that they do the rebalancing for the leverage. But over short time periods, like they can move pretty good. And I think that in this instance, there's sort of two main targets here. This 67 level, if we get a good move, is definitely in play. I mean, in reality, this thing, if shit hits the fan, this thing could just go to the absolute moon. I'm not trying to be that greedy. If I'm trading the leverage product, I probably just want to take some off of this order block here in case we put in a lower high. But even this move is pretty substantial. Like this is a 20, 23, 24, 25% move. That's a good move. You would be happy with that move in a lot of your shit coins over a short period of time. So I think it's a really interesting trade. I do. You can see on the weekly MAs looks like we're reclaiming these bands. We've got some nice compression here at the bottom of the range. I think the daily bands we've already reclaimed. Yeah, those are nicely compressed. So yeah, it looks good to me, guys. So I'm probably actually going to roll some of my own TLT into this because it looks bullish. Probably like DCA some in over the next few weeks. Just kind of sell some TLT, buy some TMF. But yeah, I think it's I think it's a great trade, and I think that's all I have for you guys. Planning on seeing what's going to happen with the tariff announcements. I think there's going to be a lot of stuff to parse through there. I can see a scenario where we're just like clicking the green button, and I could see a scenario where we're just clicking the red button, and I can see a scenario where like nothing happens and we just kind of resume the base case. The reality is we don't know. But that's why we're all in it here together in the Discord to figure this stuff out in real time. We use this video to plan, but like those plans, sometimes need to be adapted, and we just keep checking the market on a day-to-day basis and see how things go. So hope you enjoyed the video, guys. Hope you got some good insights from it. As always, I will be in the Discord if you have any questions about anything we talked about here. And I will see you same time, same place next week for next week's Magical Lines video. Hey guys, thanks for watching this week's episode. Hope you enjoyed the special video. Just a reminder, if you guys have not subscribed, please hit that like button and subscribe. Join us in the free Discord at alfalfapod.com if you want to come talk markets, life, whatever. And just one more reminder, magiclines.xyz/IL, code LONG50. Get a 7-day free trial and $50 for life off your Magic Lines membership. See you guys in the Discord, and I'll see you back here next week. Bye-bye now.